Hello and welcome to this tutorial where we'll guide you through how to compile a feasibility report. Let's get started. From your project dashboard, click on the project you've created. On the project's main page, navigate to the Feasibility tab to open the Feasibility Builder. The Feasibility Builder is divided into the 8 tabs above, which are divided into 3 sections. Firstly, all the project's expenses. Secondly, all the income sources. And lastly, all the necessary notes for the report. On the left, you'll find a cost summary that provides an instant overview of all the populated costs. The first tab is land costs, which includes various categories of costs related to acquiring and preparing the land. Fill in all of the relevant fields. Site acquisition costs. These refer to the actual cost of the land and all expenses directly related to acquiring it, such as conveyancing fees, transfer costs, and holding costs. All relevant site preparation costs, if required. Any municipal connections or contributions required. And all monthly expenses during the development, which includes all recurring costs, such as rates, taxes, and other monthly operational expenses. Click the plus button to add any additional line items under each category if necessary. Hover over any tooltip icon for item descriptions. Next is the Construction Costs tab, which focuses on the direct costs of building the project. This includes general site-related works, building costs, and pre-contract and post-contract escalation on construction costs. To add any building costs, simply click Add Building. Here you can list different areas or buildings and apply a cost per construction area to each. Exclude any areas which doesn't form part of your gross floor areas. This is necessary to calculate the floor efficiency ratio. Next, professional fees for all the core consultants required for the project. You can either enter a percentage in order to calculate the value, or you can enter the value, then CostBlock will calculate the percentage. Add any general costs where required, which includes sundry fees, development management fees, and development contingency allowances. The Finance Costs tab details the funding-related expenses for the project. The financing fees include costs for raising and registering bonds, as well as bank guarantees if needed. These costs are added to the capital outlay amount. Specify the equity contribution percentages, interest rates, and repayment terms for both the land costs and the development costs. The interest, or cost of capital, is also added to the capital outlay amount. Enter the period, interest rates, and coefficients. Then indicate the delayed tax repayment period, interest rate, and coefficient. We've now included all expenses for our project. Thank you for watching part 1 of our feasibility report tutorial. We've now included all expenses for our project. Thank you for watching part 1 of our feasibility report tutorial. In the next tutorial, we'll continue with part 2, where we'll add the income sources and conclude the feasibility study